Right, USD CNH daily chart. In terms of this breakout, it's a really simple trade setup. Regular viewers probably guessed where we're going to buy, where we're going to put the stop. I'll go through that in a moment, and also the targets and why I've picked them. So I'll draw some levels in a moment. But first of all, in terms of breakout, it being sustained, we need to look at the fundamentals and sentiment. Got to keep in mind, a lot of breakouts suddenly, or I've seen this, a lot of pairs I've done recently. You buy the breakout, sell the breakout, then the pair just stops and does nothing. I think this breakout, if it occurs, will continue for the following reasons. Let me just go through them. Interest rate differentials favour the USD. The USD's got a clear yield advantage. Now, the People's Bank of China may have to cut rates. I'll come to that in a moment. But in terms, even if we just stay as we are, the USD is going higher. Why? Optimism about the China recovery after COVID restrictions were lifted is fading. And you can see, in terms of recent economic data, it's missing forecasts. Let me just give you a couple of examples. I need to go here. This is China manufacturing PMI, a leading indicator. What you see is an initial boost after COVID restrictions are lifted. Pent up demand basically, and then we go down. We're below 50, which is in contraction territory. This recent April manufacturing PMI was below forecast, and I'll just look at some data that's recently come out. China industrial output rises less than expected. This is on trading economics, expanded by 5.6% year on year. Missing market forecasts of 10.9. That's nearly double how the figure came in. The market is too optimistic about Chinese growth. Now, for anyone unfamiliar with trading economics, is a great site. Millions of indicators on all major economies in the world. So you can look up lots of Chinese data here. If you do, you'll see most of the recent data below forecast. Okay, going back to the chart. It's clear from the data that export markets are drying up. Okay, they are. If you look at China's major trading partners, they're struggling. Eurozone's a big one, for example, struggling. Okay, also China faces competition from nations with cheaper labour, Indonesia, Philippines, etc. Global economy is slowing. Okay, that really hurts China. Also, on the other side, domestic demand is weak. In terms of, if you looked at the Chinese economy, it's not like the US economy, where in the US, GDP, 70% the consumer. In China, it's a lot less than that. It's about 30%. So domestic demand is weak. Even worse, there's a huge amount of debt around. Let me just show you the debt. On this chart, total private credit, so debt in major economies. Now, in terms of this, someone posted it in our Facebook group. I think it's really good. It shows Chinese debt just going parabolic to the upside and compares it with various other nations. The closest nation, Turkey, but it's a long way back. They say here, no country has ever survived a credit build this large or fast ever. That is true, actually. Would it cause a crash in China? Maybe, but that could be quite a way into the future. It's possibly not relevant now. But what is relevant is the size of debt and what the People's Bank of China might do. Now, People's Bank of China, they're holding rates steady. A lot of people saying they're going to cut rates. Well, if they cut rates, then basically how much demand are they going to boost when there's so much debt around? They could cut. That'd be great for our view. There's even talk maybe they might devalue. Well, that would just send the USD off the top of the chart. I think 5 is a bit of a wild card. I think the USD is going just higher anyway. This would just give a massive boost to our view. In terms of what else have we got? Institutional order flows, speculative funds, hedgers. Where are their orders? Where are stops? Where are sell orders and buy orders in this pair? They're clustered around a level. And if you look at institutional research, you'll see, a large majority all focused on one level. So if it gives way, the USD could soar higher. Just one quick point before we do the technicals. Watch the one, even if you don't trade it, because it will have an influence on the correlated currencies, which I think I mentioned at the weekend. So the AUD and the NZD, for example, they do huge trade with China. If the USD goes up on the yuan, it will pressure them lower. It will also have an impact on the ZAR, South African rand, Singapore dollar as well, heavily influenced by the yuan, and the Colombian peso. I'm sure not many people trade the Colombian peso, but big amount of trade with China. So you can look at the yuan to get clues to where those other yuan correlated currencies may go. Now, in terms of the big level, it is the 7 level, which you probably guessed. Okay, had a bit of a fight around the 7 level here, briefly got above it and then down, double topped into it there. You kind of see kind of gentle price action. Okay, it's a reasonable size candle, that one, but you kind of come up, low volatility, yet bang, a volatile candle bashing in to the level. So will the level give way? We're hoping obviously it will. Now, in terms of there's a trajectory, just some higher lows. The big level, I'm going to say, is 695. Okay, that's the major support in our view. So I think the stop needs to be behind this level. Sorry if I got my line straight. I'll go to my targets in a second once my mouse works. There we go. So 695. Got minor support there. So basically, you got your stop behind major support, or we would have our stop behind this level, 694.50. Then buy clear of the 7 level, something like 7 spot 0030, something like that. Just clear of the level. Where could we go to on the upside? I think 725 is on the cards, and maybe even 735. Now, when the dollar was up here, okay, it was looking bad for the yuan. I think the situation, the fundamentals are even worse for the yuan now. So I don't see why we can't go back up to these levels. Now, in terms of this breakout trade, very often you get breakout in pairs and then basically you get nothing. It either just hangs around or comes back. I personally think there's enough orders behind this level to trigger a really nice candle to the upside and then follow through. Okay, now if we break out and we don't follow through quickly, you just basically take yourself out of the trade. So we're looking for a breakout, we're looking for volatility to pick up to the upside. The risk to reward really good, obviously, if our view is correct. It might not be, but we like to look at this trade. Said at the weekend, we're already in this trade. We're looking to add. So we'll see if that big 7 level can give way. We'll review this pair again at the weekend when we do our weekly forecast, which I haven't done for a while, which I'll start doing each week from now on. Right, anything else I need to add? No, I think that's it. That's the video for today. Hope you found it useful. Take care. Have a good day.